GM. Welcome to Web3 Academy, where we're carving a path for doers to confidently build and invest in Web3. Don't get caught in the hype cycle. We're here so you can avoid it and capitalize on the opportunity of the next big phase of the internet. I'm Jay Bird, as always, joined by my co-host, Kyle Reedhead. Kai, what are we talking about today? Are we in a hype cycle? What's going on?
Yeah, well, we're going to talk about markets, and we've done a few episodes on this lately, mainly getting mine and Jay's views on markets. Are we in a bull run? Are we not? I've been sort of hitting the bell saying, guys, now's the time to be paying attention. Now's the time to be investing your capital. I've been saying that for a few months now. What's interesting, though, is I just did a poll in our community in Discord and asked what everyone else thinks in our community. And I think we had 20-something people saying that we're bear market and we're going lower, and only like 5 or 6 people saying that we're bull market. And I was like, oh, well, that's very interesting. And so we'll talk about why sentiment that is important in this episode. But guys, I think this is a very, very, very important time if you are in this space. Whether you're a builder or not, you still want to be getting exposure to this space because of the upside that this brings or downside. And so it's important to understand where you should be putting your capital during this time. That's why we're bringing on our guest today, Lark Davis, because he's been in this space for a long time and has done really well. And we want to make sure that everyone's kind of up to speed on markets. And so I think now is just more important time than ever.
I was just loving that Lark says down only season is over. And you got to listen to the episode to find out why he said that, because he's got a lot of good background to back that up. And today, we are joined by Lark Davis. Lark is a real leader in the crypto space, a leader of teaching those how to turn your money into wealth, how to build wealth. And he's doing this through his Twitter channel, which has over 1 million followers, his YouTube with over 500,000 subscribers, his newsletter. He's coming at us with so much great content, and he's really able to break down these concepts in a way I think that everybody can understand, Kai, which is really what was so great as we walked through this episode. I certainly feel confident about my investments.
The reason why I wanted to bring Lark on this episode is because, or on the podcast, is because Lark is not just like a crypto trader. There's a lot of crypto traders on YouTube that honestly I recommend you don't look at. Lark understands markets, right? He's been he's been investing in markets long time before crypto came along. And so he gets macro, he gets like technical analysis. He gets, now that he's been in the crypto Web3 space for years, he went through the last cycle as well. He gets the on-chain stuff and he understands these markets. The crypto markets are obviously something very different than the traditional world. He gets it from a very global perspective. And that's what I've been trying to teach, especially to our pro subscribers in their newsletter. I've taught a lot about macro. We've brought in the guests to teach about on-chain, and just recently in our Eyes on Chain report, we just talked about the different perspectives. We talked about sentiment, technical analysis, on-chain, and macro, and all of those are kind of converging together, and those are what guide you in making investments. And Lark just does an incredible job at all of those things. And so I think it was great to have someone with so much experience and vast knowledge to come in and kind of walk us through this, and like you said, in a very simple way for everyone to understand.
Yeah, and if you're listening to this, take a second to answer our poll, because we're curious what you guys want to hear us talk about more. We're talking a lot about the things that Kyle mentioned, macro, we're talking about on-chain analysis, we're talking about technical, and we're talking about sentiment. And we want to bring this more into our content because we know that being part of being in crypto and being Web3 means that you are investing in this. So be curious, answer the poll on Spotify if you're listening on Spotify. But let's get into today's episode. Before we do, we'll just take a minute to hear from our sponsors who make the show possible.
The future of social media is here, and that future lives in Web3 on top of Lens Protocol. Web2 social platforms are broken and ripe for disruption. You see, the epicenter of social media is the creators, and yet they are the most neglected. Web2 platforms like Facebook, TikTok, and Instagram are all essentially robbing creators of their worth. Creators are a new type of entrepreneur, forming new types of businesses. Yet with Web2 platforms, creators don't own their content or their profiles, and that's their product and business. Instead, they are tied to the platforms they choose to create on. Well, just like how crypto is freeing us from banks, Web3 is freeing us from these centralized platforms. On Lens Protocol, creators own their content, own their profile, and even their social graph and followers in the form of NFTs. This allows you to move freely from one social application to another with your content, profile, and followers moving along with you. Lens Protocol enables self-sovereignty for your social graph and interoperability across the internet. At Web3 Academy, we believe this is the future of social, and that's why we've partnered with Lens to ensure that the path of social media is heading in the right direction. Visit lens.xyz to learn more today.
What if I told you that industry pioneers from flagship Web3 brands such as Consensus, Polygon, Binance, Unstoppable Domains, Ledger, and Uniswap will all meet up in one place this summer? You don't want to miss this. I'm talking about the Epic Web3 Conference taking place in beautiful Lisbon on the 9th of June with over 20 curated talks, speed consultations with Web3 experts, networking sessions with investors, and even the opportunity to raise funds. This conference has it all, and you'll get the tools you need to succeed in this industry. Plus, we at Web3 Academy will attend and host a community meetup with you and the others from our community before the main event. So come along, meet us, network, and start building alongside leading Web3 innovators. We can't wait to meet you. Remember, Lisbon, Portugal, 9th of June. We've got a 15% discount for you, but ticket prices go up every few days, so get your tickets today by using the link in the show notes. Enter the promo code Web3Academy15 to secure your spot. Or if you become a pro member, you can get an even bigger discount. So go pro today, and we'll see you in Lisbon, Portugal on the 9th of June at the Epic Web3 Conference.
Welcome back, everybody. Today on the show, we have with us Lark Davis, the wealth master, here to talk about macro. Because I think we're all wondering, in this current condition, can we be confident with our investments? Are we in a bull run? Or is this just another trap? Nobody better to break this all down for us than Lark Davis. Welcome to the show, Lark.
Thanks for having me on. Excited to be here.
All right, let's start with the most obvious question right now. Are we in a bull run in your mind? How do you feel about the current market?
Short answer, yes. But we're at a very, very interesting stage in the bull run because this is the earliest stages of a major trend shift, right? We've gone past down-only season. A down-only season was not a lot of fun, but we've gone past that now. And I think it's very unlikely at this point that we're going to see a new low come in for the cryptocurrency markets. However, this is a very interesting stage of the bull market, right? Because nobody wants to believe it yet. Things are going to go bad. US recession's coming. Everything's going to go to zero still. We still have those voices, right? People are not ready to believe yet that a trend shift is underway. But a trend shift, in my opinion, is indeed underway. And these early stages of a bull market are tricky, right? Because there's so much fear still. There's so much PTSD from when things were bad. But I'll tell you one thing for certain. The only people who are going to make big money in the bull market are the people who pay attention early. Everybody who shows up when Bitcoin's at a new all-time high, those people are going to be essentially exit liquidity for everybody who's buying in 2023 before it's harsh, but it's true. It's harsh, but it's true, right? Everybody's got to go through that tough learning lesson, right? If you come in too late on the bull market, if you enter the bull market when everybody's screaming, it's a bull market, that's time to get out. Exactly. Now is the time when, look, we are seeing a major shift underway, and that shift is being led by a supply and the increase of money, which was led by China back in November 2022. They started putting money in. The Chinese economy is reopening. Very shortly thereafter, Japan started emergency buying bonds. U.S. banking crisis started happening. The U.S. Federal Reserve was forced to then start buying up truckloads of stuff, putting lots of money back into the system. So markets rise and fall based on liquidity, largely. Narratives, all stuff too, that's all great. But when we see the money supply going up, asset prices tend to go up. And so we are at the earliest stages of that happening now.
So you're not a believer that the market cycles that we have in crypto are from the Bitcoin halving?
It's very, very interesting, the Bitcoin halving narrative, because yes and no. We see that liquidity cycles in China, for example, happen every 3.5 to 4 years. It's very coincidental, right? If you look at the overall market cycles, go back to 2017. What was happening when Bitcoin hit its all-time high in December 2017? The S&P 500 was also smashing a new high. So we correlate and then we don't correlate, right? We correlated in 2017 on the run up. We didn't correlate very much in 2018 on the way down for Bitcoin because the S&P went on to hit 3 or 4 new all-time highs in the next 2 or 3 years. Bitcoin did not. So there are times when we correlate and times when we don't. It's not always as clear as we'd like it to be.
We do correlate quite well with the liquidity cycles, though, which those really started in 2009 with the financial crisis, which is also when Bitcoin was invented, right? So that's kind of a coincidence that these liquidity cycles are happening at the same time as the Bitcoin halving, but that's just when they both started, and all because of the financial crisis. It's kind of interesting. Let's dive further into, are we in a bull run or not? I think, Lark, you'd like to take multiple perspectives from what I've read in your Wealth Mastery newsletter, which, by the way, anyone listening, if you're interested in markets, check out his newsletter. Wealthmastery.io is the website. We'll put it in the show notes, but does a fantastic job of kind of covering markets from a global perspective. And you look at a few different perspectives, which is what I really like. You look at macro, you look at technical analysis, you look at on-chain, and you look at like sentiment. So what are people thinking and feeling? And I think those are kind of the four areas that you want to look at to decide, are we in a bull market? What phase of that market are we in? Let's start on the macro side, which we sort of just dove into. We talked a little bit about liquidity, although it's interesting you say liquidity is increasing because a lot of people right now are stuck on the US. Inflation is high, although coming down, but it's high. Core CPI is actually continuing to rise somewhat. And then you have interest rates still high, and people are predicting that it goes up again. So like liquidity in the US is kind of a difficult thing to understand at the moment. Give me your like high level overview on what's going on, I guess, in the US, and then maybe tie that into your global thesis of macro as well.
Sure, absolutely. Well, right now, the US is still the global leader when it comes to equity markets, money. I mean, obviously, the US dollar is reserve currency of the world. The US equity markets account for 50 to 55% of global equity markets in total, right? So it's a big deal. What happens in the USA? Right now, the market is predicting that we have one more interest rate hike to come. Just one, and then it's done. If you look at how the market is anticipating things to go, we have one more interest rate hike. We have about 3 to 4 months of pausing, so no interest rate hikes at all. And then either at the end of the year or the start of next year, we could see interest rate cuts starting to come in, which historically has coincided with bad times in the market, but it doesn't necessarily have to mean that there's going to be bad times in the market, right? They could start cutting interest rates and not have Armageddon happen. So that's a possibility, although often when they do cut interest rates, things can get a bit dicey in markets. So what happens in the US does have that very much reverberating effect around the world. However, we are seeing a lot of other economies coming up in a big, big way. We are seeing China, for example, being a major leader of those global liquidity cycles, right? And if you actually look at the data, it's very interesting to show that for more than a decade now, it's been China that has led the global liquidity cycles. And the impact of the US has actually been a lot less during that time. So it's a very interesting thing to note, right? And we have the BRICS group coming together, and they together represent half the world's population, half the world's economy approximately, et cetera, et cetera. So it's a big deal what's happening in that situation. And so if you look at the total global macro perspective, the US's leading role, particularly in the cryptocurrency markets, is starting to diminish. Now, obviously, we still have strong correlations between what happens in US equities and really just a risk on or risk off attitude globally, right? So that's very much a real part of the thing. The United States economy is not to be ignored by any means. It's still a massive consumer of global products. And if the US stops consuming, hits a massive recession, that does hurt China because they're not going to have as much stuff to sell to the Americans at that point. I think the most important thing to watch is the money moving from East Asia in particular. And of course, everyone's gonna be watching for that interest rate to finally stop hiking. And if this is indeed the last one, then that's a pretty big deal for markets.
Now, there's a lot of people saying that inflation is sticky, it's here to stay. It's kind of like anyone who's debating on the bull and the bear market, which one we're in right now, it's the bull market people tend to say that inflation is sticky, it's here to stay, we can't cut rates, or if we do, it's gonna be a long time from now. And we're in this like inflationary world for a long time. And so that's super bearish for crypto, for equities in general. Give us your like case of why inflation is not going to be stuck around. Or maybe you think inflation is still going to be around, yet we're still going to go through a bull market. I don't know. But walk me through your thoughts on that.
Well, there's multiple scenarios that are possible here, right? We can have a situation where inflation is kind of high. It's not actually that high anymore. It's down to about 5% in the USA, which is not actually that high. In fact, it dropped by a full percentage point at the last CPI release, which is a pretty big deal. So inflation is actually not very high anywhere. If you want to look at high inflation, look at countries like Argentina, where it's over 100%. You know, that's high inflation. 5% is not ideal, but it's half of what it was about a year ago, right? We got up to 9.6% or something mid-year last year. That was pretty damn high, right? So inflation's already come down significantly. Now, how does inflation factor into this bigger picture? Well, we can have a situation where inflation stays at 5% forever and markets will pump. right? We've had situations where we've had high inflation and positive market correlations at the same time too. So those things are not necessarily exclusionary. Although I think we are seeing inflation continuing to come down, and there's still plenty of wild cards that could cause inflation to go back up. But a big spike in the prices of oil, for example, could cause a big inflationary spike back up. But right now, inflation seems to be on track to continue falling. And let's say inflation gets back down to, let's say 3.5 or 3%. That's really not a big deal, realistically. So the key thing to watch is the trend on inflation. Right? If it keeps trending downwards, even if it trends downwards slowly, that's going in the right direction. What we don't want to see is a big spike back up, because that could cause a bit of panic in the markets to say, get everyone to start saying, oh crap, inflation's about to go back up. This was just a temporary correction in inflation, and now we're going to go back up, and that's going to be bad. That's definitely something to watch out for, the oil prices. And of course, the war in Ukraine, all this kind of stuff factors into this, how things can play out, but maybe a bit less these days because that oil's been rerouted, that gas has been rerouted, things have been figured out.
I mean, one, a banking crisis, which we're going through right now, is very deflationary, right? Like banks just stop lending out money at this point. So something that's going to bring down inflation, a banking crisis is the perfect thing. It's actually interesting you said that you can still go into a bull market when we have, 5% inflation or whatever, which to me makes complete sense, especially in technology and crypto, because these things are growing at way faster than 5%. I mean, if you look at OpenAI, the thing went from 0 to 100 million users in like 2 months or 3 months, whatever it was. Do you think OpenAI cares about 5% inflation? The thing just grew like thousands of percent, you know what I mean? And so I don't think that technology over time, maybe short term, it can be impacted by inflation, but like, I don't think it really matters. But anyway, let's go back to the liquidity side of things. You talked about, okay, global liquidity is increasing, and especially outside in Asia, we're seeing it increase a lot. What are your thoughts on the situation, the Balaji situation? He's talking about, okay, we're going to have hyperinflation because we're going to print too much money, right? And I know this is probably just like an advertisement for him. He says in 90 days. Interested just to hear your like kind of overall thoughts on that scenario. Whether you think it's 90 days or not is kind of irrelevant, but we'd love to just hear your thoughts on that topic.
So this really comes down to the US dollar. His whole thesis is based on that, well, the US is about to enter hyperinflation, which is not a particularly realistic expectation, in my opinion. I think the US dollar is fundamentally doomed. We've got a country that's currently $32 trillion in debt, and it's not like they're paying the debt down. They actually keep putting more debt on every single year. By 2030, 2040, I mean, we're talking $40, $50 trillion in debt, and we're very quickly running into a situation where the interest on the debt is going to be the number one line item on the budget in the USA, even more than the military, if you can imagine that. And they spend a lot on the military in the USA. So this is a real problem for the U.S. structurally, strategically, long-term. We do see a situation as well where it couldn't happen at an absolute worst time for the U.S. to have all this crushing debt piled up on top of the country, because right now the U.S. is in a very strong situation of potentially losing its reserve status. We are seeing increasing trade amongst the BRICS group, for example, with bilateral trade happening between Brazil and China in Chinese yuan and Brazilian real. They're not using the dollar anymore. Same with Russia and China. Saudi Arabia and China starting to sell oil in yuan. This is a big deal. Saudi Arabia, one of the world's biggest oil players by far, coming out and saying, you know what, we're not going to exclusively accept the US dollar and we're looking at other currencies. We have Russia saying, hey, we're willing to take Chinese yuan from anybody in Africa or Latin America who wants to pay for our oil and gas using Chinese yuan. That's fine. That's a big deal. We have the world's biggest exporters of oil, gas, metals, timber, diamonds, food, all this stuff, all collectively coming together and saying, enough's enough. We're not going to use the dollar anymore. We're going to use our own currencies now. And that is a real problem for the US dollar, because if people aren't forced to pay for oil anymore in US dollars, they're not forced to keep the dollar then as a reserve asset in their central banks. They'll need a diversification of currencies. And if the US is not the reserve currency of the world, it becomes a real problem for them, because suddenly the ability to print money as much as they please is very much diminished, because if they start doing that, then they do run the risk of massive inflationary problems domestically. So the US is in a very tricky situation. Now, I want to be clear with all that. This doesn't happen overnight. Over the past 2 months, we've seen more stories, and we've seen about the US dollar losing its reserve status and the challenge of the yuan and all this stuff that we've seen in past decades. But this doesn't happen overnight. We're talking something that's going to take a decade, maybe more, to play out before we see a real fall in the reserve status of the US dollar. My opinion, anyway.
One of the things whenever I talk about markets, I also believe that we're entering the early stages of a bull market. Everyone's like, how can that be? We're going into recession or we're in a recession. Things are so bad. There's all this stuff happening. Banks are failing. Like, how can assets go up in price? You know what I mean? This is a common thought by many people. I'm wondering if you can just kind of walk us through the dynamics that are at play here of like, okay, maybe we are in recession right now. We're going into recession. Maybe things get worse, and they probably will over the coming months, especially if interest rates stay at the height they're currently at. And then you have this conversation of, well, currencies are all screwed up and maybe we're not going to be using the US dollar so much anymore. Like, how can that still be bullish for assets? Can you sort of just like walk us through how that all makes sense so that people can wrap their head around that?
2008 was a pretty important year for the way we understand money because suddenly banks got too big to fail. Suddenly, infinite bailouts were put on the table. And this is exactly what has distorted markets. Effectively, the US went into a recession last year if you base it on historical metrics of how we count recessions. However, the White House came out and said, well, we don't actually do that anymore. We have a little organization of 5 or 6 guys in a room and they say when there's a recession or not. And so everything has been completely distorted in markets. So when you understand everything's being completely distorted in markets, all these ways that we understand how things have worked can be challenged. And so if there's a recession officially declared in the USA, it's basically already been a fact for a while by that point. Mm-hmm. And we're seeing a lot of things challenging that. Inflation's coming down. Company earnings aren't all that bad. Yeah, banks are collapsing, but banks collapse. Everybody's just taking their money over to JP Morgan. Big banks get bigger, et cetera, et cetera. The key thing that's come out of this banking collapse crisis, though, is infinite money printing once again. You see there's 100 regional banks or something in the United States at risk of collapse. But what have they said in response to that? Look, we know you guys are sitting on $620 billion, which is the FDIC's estimate at the time that the first bank collapse happened, and it would be bigger now. But they said, we know that these banks are sitting on $620 billion of unrealized losses, meaning that people want to go take their money out of the bank, they have to realize the losses and the banks collapse, essentially. That's a pretty tricky situation. You don't want to have this crisis of confidence in the U.S. banking sector, which is already happening, but they want to mitigate that as much as possible. So they've gone to say, hey, we're going to launch this bank term funding program, which is essentially a giant money printing program where they're going to guarantee the treasury bonds, the mortgage-backed securities, all this stuff that all these banks are holding because they couldn't find enough people to give house loans and stuff to. So they started investing all that money, acting like hedge funds, investing all their money into treasuries and into these mortgage-backed securities, which fluctuate in value, right? They're not always worth a clear price. And now we have that massive losses sitting there. So not only did the Federal Reserve roll out this program to cover hundreds of billions of dollars of losses in the USA, they extended that program internationally to Japan, to Canada, to the UK, and to the European Union. So this is a pretty big deal. So we have them essentially saying to foreign central banks, don't worry, all your local banks that are also sitting on giant unrealized losses because they bought US treasuries and because they bought US mortgage-backed securities, we're going to cover that tab too. So this creates a situation of nothing is allowed to fail in the markets. Money will be printed. And as we see money printing come into play, markets can indeed rise. Now, look, if there is a U.S. recession, U.S. equities will be hit. That'll be a near certainty. But how bad they're hit, how shallow or how deep of a recession is, I mean, if you go to social media, you get every range of opinion from there'll be no recession, there'll be a super shallow recession, so this is the new Great Depression. Buy guns and food now because your money will be worth nothing. Okay. Chances are things will not be that bad though because, again, central banks have distorted everything.
It all depends on the liquidity. This is the thing I think that people need to wrap their heads around. Liquidity is everything at this point. I saw a chart in Global Macro Insight. This is Raoul Paul's investment newsletter type thing that he has reports. And they have a chart that shows that the global M2, so global liquidity, the correlation to that in the NASDAQ is 97% since the financial crisis. That is absolutely unbelievable. They're now calling this the everything code, where just everything relies on liquidity. And so what I think people need to wrap their head around is okay, there's interest rates, there's inflation, there's recession, there's all these things. Ultimately, though, the only thing that matters is what is going to happen with liquidity. And interest rates or inflation might impact liquidity. That's why we want to know what's happening with interest rates. But ultimately, it's if liquidity is going, the assets are going. At least assets that are a hedge to currencies or that produce future, revenues like technology kind of thing. So at least, anyway, that's my sort of idea of how macros work right now. Is it's just all matters is liquidity. That's it. And especially if you go into recession, what's the answer to recession? Print money, right? Mm-hmm. What's the answer to a banking crisis? Print money.
Print more money.
Yeah, right. Like, what's the answer to all this stuff? It's all just print more money. Macro outlook for the rest of this year, then macro outlook maybe then for next year. Any opinions on that, or are you not really going that specific?
Well, I think that there's still a pretty decent chance the U.S. does enter a recession, but it's probably not going to be as bad as a lot of people are anticipating. And that kind of fits in with my general thesis of where Bitcoin could go this year, right? That we could see a rise of Bitcoin up to potentially $48,000. I think that's, if you look back at some historical charts, we tend to see Bitcoin rally near to its previous all-time high, about 30% away from it, but never quite get that before the Bitcoin halving. Now, we could see an unprecedented event where we have essentially broken that 4-year Bitcoin cycle, which is largely lined up with the 3.5 to 4 year liquidity cycles that we see globally, primarily again led by China. So we could see a breakout here where we see just so much liquidity in response to a crisis that asset prices bump. And if you think, well, there's a crisis going on, surely asset prices can't bump. We just had the COVID crisis where that's exactly what happened. They printed giant amounts of money. They gave everybody free money. Asset prices went absolutely insane. So there's precedent for this in very, very recent history. Right. So that's something to keep an eye on. But if we do get that rise up to 48K after, for example, the Fed stop their interest rate hikes, people get a little more excited about markets. They take more risk on attitude. But then we do get that maybe there's a spike in oil prices over summer. Maybe it leads to the U.S. officially declaring a recession, even if it's a shallow one, that could bring markets back down later into the year. So I'm not expecting a new all-time high for Bitcoin or Ethereum before we see the Bitcoin having come in next year, and we get a lot of this macro stuff kind of dealt away with to an extent, right? We need to know that, look, is the U.S. is it or isn't, right? Going to get into a recession? If it does, how bad is it going to be? How long is it going to last? Just declare a recession already, guys. Let's get it over with. Let's just deal with it and then move on. Like, come on.
Jay, any other questions on macro, or should we move on to the next there?
I want to hear your take for the rest of the year. Where do you think you could see in the rest of the year? And if you want to pick a price for Bitcoin, I know we don't usually predict prices on the show, but I'd love to hear your thoughts.
Dude, I was actually going to ask where you got did you say 48K or did you say 38?
48K.
Where did you get that from? Was that like a technical analysis?
If you look at the previous cycle, right? So from 2017, we had our 20K price, and then we got up to about 14K in 2019. Look back at the previous cycle, also very interesting. It came the bull market peak of, what was that? Math brain here, 2013, right? And if you look up around about a year later, we came back up within 30% of that price again. That lines up with some Fibonacci levels and stuff like this. So plus a major area of price resistance around that 48K level as well, right? So that was sort of the final rally before markets completely tanked in 2022. So yeah, for a few different reasons, I'm looking at 48K as that potential area where there's going to be a lot of liquidity looking to get out of the market and all that kind of stuff. So I think it's a really important area for us at 48K that could potentially, based on the charts and stuff I've looked at, could be a potential high point for the year.
Right. I actually very much think very similar to Lark. I think that we have entered a bull market as well. I think it's early phases. One thing I think when we say bull market, it doesn't mean the bull market we all think of 2021, right? Or of 2017. Like, you could have a bull market where things go up somewhat normal. Although I wouldn't even say this is normal, because already in the first 3 months of the year, we went up like 80 something percent. I think we're down to like 65%, Bitcoin's up or whatever on the year. That's insane in any other market. You know what I mean? We have some room to grow this year. I think that the more we have banks collapse, or the more we have these like problems, I think these are only good things. This is actually, bad news is good news right now, because I think it just means more money is going to get printed. It's going to happen faster. And so I think inflation's not even a conversation anymore. I think interest rates start to go down, and they go down this year at some point. And I think the money printer the money printer is already going off around the world. I think in the US, we're probably going to see it this week because of the recent bank that just went down. I think we're going to see another shoot up in this. And so I see no reason why crypto doesn't continue to go up. I don't look at technical levels like you do, Lark, so I have no prediction on that. Though I would say I think ETH outperforms Bitcoin big time, and maybe ETH makes an all-time high, I don't know, this year. But I think next year is when we go into a raging bull market. And this year, kind of like what you said, we go up, and I think we go up considerably more now. And then we kind of either just chill for a little bit, or maybe we start to go back down for a little bit until the next bull run starts, whenever that is. But you want to be buying now. As I've been saying this, I've been yelling this for the past couple of months. I was like, now is the time you want to be putting your money in this market, and it will go up and down. and that's fine. But like, I think we're in the early stages now for sure. And I think for equities too, I really do. I think even if we hit recession, it might be a quick jump down when they finally announce it. But I think they'll already be printing money at that point, and they're going to probably send interest rates super, super low at that point. And I think that's when we hit that like raging bull market. So I don't know.
Company earnings are good. The labor market's still pretty strong in the U.S. Inflation's coming down. Like, it's not as bad as portrayed in the media. I just want to add 2 quick points on what you were saying there. One is that I like to think that wherever Satoshi is, he's still out there. He's just smiling to himself going, yeah, Bitcoin's pumping while banks are collapsing. Good, people are getting it. And the other thing is that people understand it's a bull market. I think people fundamentally misunderstand the bull market as only being that like 2, 3, 4, 5 month period where like everything's going completely crazy. That's the top of the bull market, right? We're at the bottom of the bull market right now. Mm-hmm. And that's a very different kind of phase psychologically to be in, because you still don't want to believe things are real. You still are suffering from PTSD from all the crazy crap that happened in 2022. But from all the indicators that we're seeing on chain, technical, so on and so forth, we are at that phase.
Well, that's a great point, because what that makes me think of is if you remember the beginning of 2022, when some people were saying, okay, this is the bear market, this is the down only phase, there were so many people who were like, no, we're going back up. We're going to all-time highs again. And that's the same feeling that people have right now where, no, we're still going to go down. And we're like, no, this is the actual beginning of the bull market, right? And so we'll talk about sentiment in a second, because I think this is actually a really good indicator of when you should be shifting. But let's go to technical analysis. I know you have Rect Capital, who does a technical analysis kind of report inside of your newsletter on I think it's a monthly basis, maybe it's weekly, I'm not sure.
Weekly,
yeah. And so I know he was showing like, hey, we've entered the next phase in a technical analysis way. I'm not sure what those charts were representing, but I know you also had your own stuff. So why don't you walk us through on the technical side of things, kind of what you're seeing, and if that leads you to believe we're also in a bull market from that.
One thing I always look at when I'm trying to say, okay, where's the market at, is those bigger time frames, right? So we're looking at the 1 week time frames, the 1 month time frames, and those tend to tell us some very interesting things compared when you look at the daily, right? This is the thing, you got to remember, if you're a trader, you're looking at the hour, the 4 hour charts, the daily charts. That's a very different perspective, right? You're looking at what's going to happen. Where's the short-term momentum at? If you want to look at where the long-term momentum at, is that we are seeing some very, very different things starting to form up here, right? So we could even zoom out to the 1 year charts, right? And look at the 4 year cycles. And basically, this year would be the accumulation year, right? And then next year would be the big exciting year, right? Potentially with the blow off in early 2025 or something like that, after which we get a big candle down. But if you look at all these different charts that we can see, for example, like the monthly MACD, great indicator for long-term trends. That is getting close. Hasn't confirmed yet, but is getting close to confirming a bullish crossover. Now that bullish crossover on the monthly MACD has marked the start of a new bull run every time it's crossed. So we're getting close to it. Hasn't confirmed yet, but we're getting close to that confirming. So these kind of bigger term trends are definitely the things to be keeping an eye on here. You can look at RSI, for example, and even in this big rally we recently had, we didn't even get to overbought levels on the RSI on the weekly, for example, right? So normally if you want to say, well, that run's had its fill, you'd want to see an overbought signal on that RSI. We haven't got that yet, making me think that, again, we still have fuel left in the tank for a potential rally up to 48K for the rest of 2023, for example. The higher time frame charts telling a very, very interesting picture compared to the chaos of looking at the 4 hour or the daily charts.
Yeah, I am not a technical analysis analyst by any means, and I can't stand the 1 second, 1 minute type stuff. Unless you're day trading, it's pretty useless in my opinion. But when you zoom out, I think it's actually very, very useful to look at this kind of stuff. And that's something I've got a lot from your newsletter, which has been very, very helpful in my understanding of where we're at in the cycle. So I think that's really good. Jay, any questions on the technical side of things?
No, I'm excited to get into the on-chain stuff. Speaking about the newsletter, I know that you just launched your first on-chain analysis. By the time our viewers will hear this, your second on-chain analysis would have come out. What did you find from releasing that first on-chain report?
Well, we've been doing some different on-chain stuff relatively frequently in the newsletter, but I decided, it's time to actually do a proper breakdown every week of what's going on. And there's just so many on-chain things that are interesting. And we'll take a little nugget from Bitcoin and a little nugget from Ethereum here, because there's two very interesting things. One, if you look at what's happened with Bitcoin, there's two things I really want to point out here. The first is that the Bitcoin on-exchange balance is incredible, because we have seen a nonstop decline in the Bitcoin on-chain balance for about 2.5 to 3 years now. We have reached peak Bitcoin on exchanges. And it's only going down over time now. This is the first cycle this has ever happened in. Previous cycles, always more Bitcoin going into exchange, more Bitcoin going into exchanges. So we've reached peak Bitcoin, right? It's only going to go down from now. Remember, BlackRock and all these guys are coming after your Bitcoin. They're going to buy it off of Coinbase and stick it in their little fund where it's never going to leave. It's a black hole for Bitcoin, right? That's something very important to point out there. The other is that the number of holders, of course, in direct correlation to the exchange values continue to go down, keeps going up over time. And what is very encouraging to me is that, yeah, there's still, big whales out there and stuff like that. But I'm much more excited on a personal level about the guys who are buying, 0.1 Bitcoin. That means it's regular people. 0.1 Bitcoin, what's 2,500, $3,000 right now, whatever it is. At the time you're going to listen to this, that really means that more people are understanding Bitcoin and getting on the Bitcoin train, right? So reaching new all-time highs consistently for people who have 1 Bitcoin or more, people who have 0.1 Bitcoin, people who have 0.01 Bitcoin or more. So this, in an on-chain sense, is really, really exciting because it means people are buying and holding. If you look at, so these are all new numbers, right? Hit these new all-time highs, and then you look at how much Bitcoin has moved over the past 2 years. We're also at new all-time highs for Bitcoin that has not moved, right? We're at about 65% of the supply that has not moved on-chain at all for 2 years. It means people are just buying and holding it. They're sticking it away in a safe and they just forget about it. And that is a very, very powerful thing. And I want to mention something real quick about Ethereum on-chain because this blew my freaking mind. Not only, of course, ever since we've entered the merge, right, and Ethereum switched over to proof of stake and all that stuff, have we seen a situation where we now have, because the emissions have gone down by 90%, we now have a situation where instead of about 2.5 million new Ethereum entering the ecosystem, with the burn in effect as well, so not only do we have that 90% supply reduction, we also have the burn. We actually have Ethereum now being deflationary by about 0.1% per year. We've had over 100,000 Ethereum burnt, right? So the supply has actually gone down by 100,000. Pretty crazy thing. And the final thing I want to mention here, because it's super interesting on-chain data, is that the Ethereum staking unlock, right? There was a lot of fear and uncertainty around it, and I had no idea how the market was going to react, right? I actually thought it would be even more people trying to get out than there was. But actually, in terms of validators looking to exit, the biggest validator that had to exit was Kraken Exchange because the SEC forced them to shut down the staking program. Had it not been for them, very few validators would have actually exited on. And one that's very interesting is that about a week or a week and a half or so, 2 weeks after the staking unlock happened, we're actually at a new all-time high already for the total amount of staked Ethereum. So far from people rushing for the exits, people rushed to get in because now they have the certainty that they can get out if they want to. It's crazy.
It's so interesting that right now we're seeing all-time highs of new wallets buying, as you said, 0.1 or 0.01 in this market sentiment. What do you think is driving that? We're in this horrible, usually the people that come in with new wallets are buying at the top when everybody's screaming bull market, bull market, bull market. Who are these people? Where are they coming from?
People that are increasingly waking up to what's going on around the world. They're seeing the banking crisis. They're feeling like, well, where can I keep my money? I guess I can buy gold, but maybe there's something else. So people are learning about Bitcoin, people are learning about Ethereum, right? People are learning about these alternative investments. I mean, one thing that has been, again, fascinating to see if we look at on-chain data, and something we actually covered this week, is that the total number of daily active users is near an all-time high right now.
Which has never happened in a bear market before.
No, it's absolute insanity. The users are here. People are sticking around. I mean, for anybody who wasn't around in 2018 was a very rough bear market because there wasn't much built, right? You just could send largely just transactions back and forth. But what happened in 2020 and 2021, we saw this absolute Cambrian level explosion of evolution of this technology where we have all these DeFi protocols. We have different chains that people are actually using and actually want to use. Things are very exciting. Now, people stuck around in 2022 in a way that they absolutely did not in 2018. 2018 was a ghost town in crypto. 2022, people stayed. People kept doing stuff. People kept trading. People kept doing DeFi, flipping NFTs, all that kind of stuff. So remember, we are right now at about 300 million approximately people globally who have some kind of exposure to crypto. They bought an NFT. They have $50 for the Bitcoin, whatever it might be, to right up to the whales and all that stuff. We are predicted, based on the growth curve of cryptocurrencies, we could be up to 3 billion users by the end of the decade. And people are still fading crypto. You're going to tell me 2.7 billion people are going to come in and buy up crypto assets and the number's not going to go up. Come on.
Next time we should start with the on-chain stuff, because this is way more positive than the macro
Oh, yeah.
conversation. We gotta flip the order here, guys, next time.
Like macro seems dim and gloom. I think the macro is still super positive. So I don't know.
It is super positive. It's just, it's doom and gloom because it's like we're all kind of fucked because our whole banking system's going to zero.
Well, I was just going to say, we're talking like, okay, on-chain data is at all-time highs in terms of like those buying Bitcoin, sure, but it's also just in terms of users and blockchain in general. We saw that in the State of Crypto report that just like in general, you also have stable coins, which the use case of stable coins is going through the roof in terms of like new wallets using that, which is crazy considering like you've had the USDC peg, you've had UST collapse last year, the FUD with like BUSD. So like, it's crazy that that's actually still going. That's almost in its own bull market. And I think that's happening. You ask like, who are these people, Jay? I think it's the people that are in all of these countries that either have sanctions, that their currencies are going through hyperinflation. Like in Argentina, it would be crazy to hold on to your peso right now. You can't get US dollars unless it's on the blockchain, right? So like, my assumption, and we have two Argentinians that work for us, that's all they use is crypto. It's the only way, right? They only use USDC. They just have to. Well, I think they use Tether. But I imagine this is happening in many countries around the world because there's many countries that are having all these failures with their currencies right now. So like, I don't know. That's why I said who people might be.
And what did Val just say, who's on our team, said that she just spoke to her friend who she considers educated in Argentina. And she said that she currently loses 30% of her money per year, and she thinks that's good. She thinks she's doing well compared to her friends and her family. She's doing better. Losing 30, what?
Well, and this is actually brings up such a good point, guys, is that I think a lot of people in the English-speaking countries, right, all the highly developed economies, we forget what is going on in the rest of the world. For a lot of people in like the US or Canada or wherever, like Bitcoin's a bauble. It's a thing to invest in and it's fun. And like, hey, more people are waking up to the idea of monetary freedom. More people are waking up to Ethereum, decentralized finance, and how powerful it is, and digital collectibles and all that stuff. That's great. But what's important to remember is that for people all around the world who the banking system has not catered to, who central banks have screwed over beyond your imagination as somebody who lives in a Western country, these people are actually using crypto on a day-to-day basis. They need crypto, and we are seeing that this is the growth opportunity. Africa is the growth opportunity, remittances, people escaping from failing fiat currencies. Latin America is the growth opportunity. Again, same stuff, central bank insanity, cross-border remittances, cross-border business. Look at Argentina, again, great example. They have so many capital controls. You can't get dollars. People trying to export stuff are totally screwed because they're forced into government exchange rates and stuff like this. They need crypto, right? And countries under sanctions need crypto.
And countries like that are in Africa, India, etc., these all have young populations that are all entering the workforce, and they're all educated for the first time. You have people who are making money on the internet that don't have any other currency except to use crypto, basically, because their countries are screwed. For me, anyway, the setup for the secular trend of crypto adoption just makes complete sense. Just from the financial side, this has nothing to do with like the Web3 side of like NFTs, all that kind of stuff. You can forget about that. We don't need that for the next cycle. Though before we get a sentiment, I do have a question for you, Lark. Typically with each cycle, these cycles in crypto, and I think it's more liquidity driven, but they also are partly driven by like some new thing happening in the space, right? We had the first cycle was when like the new, like the Bitcoin forks all came about. Then you had the ICOs back in like 2017. And then this last cycle we had, DeFi and NFTs. What do you think? And maybe it's just liquidity, and maybe it's just people recognize the need for self-sovereign money, but is there another use case that you think like really takes off and like is the thing that takes us to that sort of like blow off top kind of thing?
I think all that stuff comes back in a raging way, right? We're going to see new blockchains. We're already seeing like Aptos and Sui and stuff. The blockchains higher, faster, smarter, stronger blockchains, whatever, right? They're not 8-minute apps or 7-minute apps, right? Kind of thing. So we're seeing these new blockchains come through. Those are going to get a lot of attention, especially from people who are less worried about questions about decentralization, your blockchain even staying on all the time, stuff like this. We're going to see definitely an appetite for those kind of technologies, and that's going to drive people in, right? NFTs are going to take off and find new use cases and go beyond just the crazy speculation that we've seen in them. NFTs right now remind me of where we saw a lot of altcoins in like 2017, 2018. I guess that's more like a 2018 moment for NFTs, but there are use cases there. There are strong projects, and even though we had an abundance of crap, we do have some good projects that are shaking up the game, that are doing interesting things, right? But one thing I think is probably really going to be the big mover in crypto that's going to bring in literally trillions of dollars into this marketplace is real world assets, right? We are going to see more tokenization of real estate, more trading of real estate. We're going to see tokenization of equities, tokenization of bonds. We're already seeing it. I want to be very clear. We're already seeing that. I mean, isn't it? I think MakerDAO's taken $500 million of US treasuries. We're seeing different companies actually in like Europe, for example, they're tokenizing corporate bonds and putting them onto the blockchain. And then companies are swapping them back and forth. Like these early pilot cases are very quickly going to become really big deals and really big on-chain marketplaces where suddenly you're going to be able to buy treasury bonds if you want to on-chain. This stuff's all going to move across borders, across blockchains. It's going to be absolutely nuts. And it's going to bring a lot of money into the market. And I know we've been talking about real world assets for a long time in crypto, but I think this is probably the bull run where we could see it really be a big thing as more institutional players get involved. And they want to see these institutional grade assets brought on chain. And they're going to be the ones bringing them on chain.
So technically that's DeFi. You think DeFi is going to be the big thing this cycle is what you're kind of saying.
Institutional DeFi, yeah.
Interesting. Very interesting. I haven't thought of that one. I was hoping you weren't going to say gaming because that's what everyone says.
Well, gaming will make a comeback, but gaming's got a lot of sins to answer for with their tokenomics and bad games and all the rest of the stuff. Where's a will, there's a way. Don't worry, Kyle. We've got human greed. Gaming will come back.
Okay, let's finish this off talking sentiment, because I think this is an important part in terms of just like understanding markets and investing, because oftentimes people just go on Twitter or they listen to the media and they just hear what everyone else is saying. And if everyone else is saying they're bearish, they're like, okay, then I'm bearish too. I'm going to sell. Or we're bullish. Okay, now it's time for me to buy. Just like you said, that last 5 minutes or 5 months of a bull market, that blow off top, that's the last time you should be buying. But that's when everyone's telling you should be buying. So sentiment is actually a really, really important thing to be looking at as an investor, as someone trying to understand the markets. Talk to me about how you look into that and how that plays a role in like when you're buying, when you're selling, that kind of thing.
Sentiment is such a big thing, and it's hard to be contrarian, right? We've all made plenty of mistakes when it comes to that. I mean, even me in early 2022, I was late to accept that actually things are getting pretty bad, right? As a lot of people were, right? Yeah, sure, I took plenty of profits during the run up in 2022, but
not enough.
Yeah,
no more.
Sentiment is a very, very tricky thing because it goes completely counterintuitive to what your brain is telling you. And you have to say, no, brain, you're wrong. Right? Be quiet, lizard brain. Rational brain is going to take over here and actually look at things as they are. So when market sentiment is bad, nobody wants to buy because everything's bad, right? But that's actually the time to buy fundamentally strong assets. Because if you believed in Bitcoin and Ethereum and all that stuff and everything we've talked about on chain and then billions of users coming in, these assets are going to go up in price at some point. Now, if your whole idea is, well, but I'm going to buy it when it goes down, it's going to go down. U.S. recession is going to come. I'm going to get Bitcoin for $3,000. Good luck. You'll be sidelined when it hits the all-time high and probably full moon at the all-time high and then give 75% of your money back when you capitulate in 2025's bear market. It's tough, but true, right? But if you want to think about, okay, well, now is an interesting time to be buying because sentiment's really bad, and we're not saying rush out and throw all your money in overnight, right? That's never the message. It's about learning about assets, taking your time to educate yourself, dollar cost averaging in, finding good entry points, all that kind of stuff, right? Buy on red days, not green days, et cetera, et cetera. But if you're looking, okay, well, that's all great. I can accumulate assets now, but then what, right? When do I get out? Well, some simple things you can keep in mind in terms of gauging social media sentiment. One, you can look at the Bitcoin Fear and Greed Index. When that starts hitting like 85, 90, 95 and stays up there for a couple weeks or something, that's the time to consider, hey, maybe things are getting a bit crazy, right? When we see, for example, people posting daily pictures of the new Rolex they bought, a new car they bought, their mom, all that stuff, that's great stuff, but that's also saying markets are overheated. When we see the Coinbase app, Crypto.com app hitting number 1, number 2, number 3 on the App Store, also a time to be worried. When we see the mainstream media saying, hey, new paradigm money, everyone, there's that famous article from, I think it was the New York Times in 2017, and it's got these two crypto bros, one's wearing a Bitcoin shirt, one's wearing an Ethereum shirt, and the headline is, everybody's getting silly rich in crypto, something like that. These are top signals, right? These are signs to say, hey, the greed is getting out of bounds right now. That all bunch of different technical indicators we can look at, weekly RSI over 90 and stuff like this. But if we just go for a real sentiment point of view, that's the kind of sentiment that's actually dangerous in markets, right? And we can maybe end this conversation on the simple quote from Warren Buffett, because he's absolutely right. Be fearful when others are greedy, right? And be greedy when others are fearful.
Well, and to give context to this, if you think about it, just like how this actually works, if everyone is bearish, everyone's like, I'm not buying anything right now, I've sold all of my crypto. Well, then that means there's no sellers left. That means it's the good time to buy, as long as what you said, the key component was, that's the time to buy fundamentally strong businesses or technologies, right? When everyone is bearish, it's not the time to go and buy the next meme coin, okay? But it is the time to go and buy the thing that you know is going to make it through the bear market, like Bitcoin and Ethereum. Because look, everyone right now is bearish because they're just lagging, right? They're lagging on the indicators. They don't understand the macro. They don't understand the technical analysis. They're missing something. But if everyone is already bearish, there's just no one left to sell. And that's why, like, when the FTX collapse happened, ETH didn't even reach a new low, because at that point, everyone had already sold. There was no sellers left. And at that point, when you want to start deploying your capital, and then same thing when you're saying, like, when we reach that top, when everyone's like, oh, I've made all this money, it's like, okay, no one has any money left to put into crypto, which means everyone has to sell. Like, gravity is now going the other way, right? So it's like, that's the way that you need to be thinking about the sentiment stuff. And right now, everyone is still super, super bearish. And so I think, again, when I look at the four things, it's like, okay, macro good, technical analysis good, on-chain stuff really good, and then sentiment really bad, perfect. You know, like, that's the time you want to be. If it was sentiment also is like good and everyone's bullish, I'm like, shit.
Where's too bullish? Something's wrong.
Like, what's going on here? At that point, when those four line up, that's probably when next year or something, right? When we're out of recession, everyone's feeling good and everyone's pumped because everyone's making money. Their houses are worth double what they were, you know, this year. And that's the point where you're like, okay, I got to get the heck out of here. So
remortgage the house, buy Bitcoin at the top. When you see that guy posted on Twitter, you know, oh crap. Stop it out.
Or once your friends or your family starts asking if they should be buying Bitcoin and ETH, you sell.
In like April 2021, I had a couple buddies come, and I met with them separately, maybe 2 weeks apart from each other or something like that. And they both told me that they were thinking about getting into crypto and they were going to buy Shiba Inu. And I was like, oh, fuck.
Wow, God. You're like, I got to shut down the whole business.
I got to go back to something earlier. You mentioned price prediction for Bitcoin at 48,000, and we never get price predictions on our show. So it's always fun and exciting for us to get something different here. And our listeners, I think, are really liking this. Let us know if you are, by the way, guys. ETH, do you have a price prediction for ETH this year?
I do not have a price prediction for ETH this year. I think it depends on how the markets go in general. But if we see Bitcoin get up to 48K, I do not believe that Ethereum will go off and hit its own new all-time high. But I think we could see Ethereum getting up to like 3K, something like that in the situation where Bitcoin hits 48K. So the majors will hit new all-time highs. We'll see random coins pop off to new all-time highs, stuff come out of nowhere, hit new all-time highs. That's fine. But those are the outliers, right? The coins that have been around, Ethereum, Bitcoin, Avalanche, stuff like this, they're not going to hit new highs this year, in my opinion.
So to wrap up, Lark, a lot of our listeners are new into the space, and this might even be their first cycle. So advice for what they should be doing now, and maybe even just some advice for the cycle itself. But also, I know some of our listeners many of them were around in the last cycle as well. So just knowing the context of who's listening right now, any advice you can give them as we wrap up here?
I think the most important thing is to be paying attention right now. Look at everything we just discussed, right? The liquidity situation, on-chain metrics, all this stuff, right? Sentiment. Now is the time to be paying attention, right? Now is the time not to get caught up in having that post-traumatic stress syndrome from 2022. 2022 is bad. We're all here through it. We all suffered through it. We all know what happened. But if you update your psychology too late, then you're going to miss out on a lot, right? If you're waiting for everybody to tell you it's safe to buy, then you're buying at the most dangerous time, right? Now it's time to be paying attention. Now it's time to be putting in those hours, doing the research, getting those test nets, man, getting those airdrops, getting that free money, putting in the work. You know, when I talk about putting in the work, it's real because people don't, right? And if you want to make money in the cryptocurrency markets, you need to take the time, put in the work. Arbitrum, everybody screamed from the top of their lungs about the Arbitrum airdrop for like a year, and probably only a couple 100,000 actual people got it, right? Because people have multiple addresses and all this stuff. Out of 300 million crypto users globally, only a fraction of a percentage actually got it, when all you had to do was bridge some money over, make a couple swaps on Uniswap, and you could have got 3, 4, 5 grand for free. Put in the work. There's test nets coming up that are going to make big money. There are new DeFi protocols. There are new altcoin gems that are going to be the next big things in the next cycle, right? Even just focusing on what's happening on the Ethereum ecosystem updates and stuff like that, and building your portfolio around that, like now's the time to pay attention and to put in the work when things are quiet. Because when things go crazy again, you're not going to have the time to do that stuff, nor will you want to, because it's going to be the time of danger.
A great place to wrap up, because it feels good to know that we all can invest confidently right now. We're in a good place, as everybody seemed to feel. Macro, technical, on-chain, and sentiment all going in the right direction. Although you never know what the future can hold. So pay attention. Do the work. Keep listening to Web3 Academy. Check out Lark Davis. If you're not following him on Twitter, if you're not following him on YouTube, if you're not subscribed to his newsletter, he's got everything you guys need to know to stay on top of it and invest with confidence. Thanks so much for listening in, everybody. Have yourself a great week.
Thank you for listening to Web3 Academy. We hope this helps you along your Web3 journey. And if it does, please share this episode and subscribe so you don't miss the next one. Nothing in this podcast was financial advice. Crypto and Web3 can be risky. You can literally lose it all. In fact, if you invest on account of what we say, you probably will lose it all. So don't do that. In all honesty, the point of this podcast is to remove the noise of markets and price and focus on utility and implementation anyway. So you should not take any of this as financial advice. Thank you, friends, and see you in the next one.